Good afternoon, good evening, and good morning, Auto World. I'm Jamie Butters, Executive Editor of Automotive News and host of the Daily Drive podcast. Welcome to this Automotive News live chat from our studio in Detroit's Brewery Park, home of Automotive News and Crane Communications. This week, we published our third annual rigorous report on dealership mergers and acquisitions, commonly called buy-sells. It's a great project under the Automotive News Research and Data Center. Very popular with our readers. Some people are super into it, so they get the all access subscription where you can really analyze the data over time and by state and look year to year at which companies um, did the most buying. Lots of cool stuff in there. The buy sell market in 2023 kind of resembled the year in auto retail, less lucrative than the past couple of years, but still historically high. The number of transactions was down a bit, but comparable with 2021. Number of dealerships sold was little changed from 22, but still down from 21. The number of franchises changing hands fell by about 10% for the second straight year. And this is usually when I would tell you that the thing about historic highs is that they don't last forever. But 2024 is off to a hot start. The buy sell team has already tracked more dealership sales in the first quarter of this year than in any of the previous 3 years. So we'll see. Uh, Despite higher interest rates and challenges such as the CDK cyber attack, there's a lot of demand for franchise auto dealerships and their resilient profits. Public dealers and other big groups looking to fill out their footprint, small groups trying to gain some scale, managers looking to bet on themselves after a few big earnings years, even private equity investors. There just still seems to be a lot of potential bidders out there for anyone ready to sell. So let's talk about it. Sitting with me is Gail Howe, who covers buy sells at Automotive News as a member of our retail team. Hi, Gail.
Hi, Jamie. Thank you.
Glad to have you here.
Thanks.
We're joined remotely by Stuart McCallum today. He leads the dealership services practice at Withum, the accounting and consulting firm. He's down in Orlando, Florida. Stuart, welcome.
Thanks for having me.
Great to have you here. We're going to pick your brain for quite a while now. We're going to have a great conversation today. We want the audience to be a part of it. If you have comments, you can drop them in the chat, or even better, let us know if you have questions for Stuart. We'll put those in the chat and we'll do our best to get you an answer. Stuart, before we get too deep into the numbers and whether there's a widening expectations gap between sellers and buyers, I have to ask you about CDK. Has that been much of a disruption in the buy-sell market?
So we did have a closing last week. What was interesting is I didn't really think about it, and then a couple of days beforehand, I thought, well, how are we going to get any of the information? Because usually that's pretty perfunctory. I have to imagine anybody that closed in the last couple of weeks, there was some stress around it. My guess, though, dealers, and this is, I think, the common theme amongst dealers, is that they tend to be very resilient, resourceful. All right, well, we'll just put everything in escrow. We'll close last week, but we'll settle up on the money this week when we have access to the financials or whenever the accounting is finally updated. We've had some buy-side diligences that we've been trying to get information on where we just can't get it, right? And so in that regard, those deals will likely need to be kicked down the road a couple of weeks when we can get access to accurate financial information. So I understand CDK is coming back online. The dealers that I've talked to, it's not as though when their computers turn back on, they saw the last screen that they saw. What they're seeing in many cases is a backup from, Lord knows when. So it's not only just updating the information that happened during the last week and a half or 10 days, whatever it's been now, but also trying to figure out where that starting point is. So I think there'll be some ripples, but the ultimate impact, we have to still wait and see.
Yeah. I do wonder, kind of the takeaway, what we're learning from this, if, owners and other investors are reconsidering what they might need to spend on cybersecurity and other services, maybe would cut into profits a little, but be able to ensure that they can operate and keep making money.
Most dealers I know or that I've talked to, they likely outsource their IT, right? What we call managed services. Well, you probably shouldn't just have one, right? Most dealers that are of a large group, they don't just have one bank. They have multiple banks in there. You probably don't want just one managed services provider. You don't want one IT professional. And there's a lot of dealers out there that probably realize that just being on the cloud isn't a cybersecurity strategy. That's maybe a part of it, but every dealer out there should, and every company out there should really have an individualized plan regarding cybersecurity controls and a resiliency plan to put in place. Because as we've seen here, it's not a matter of if, it's a matter of when. It's happened over and over again. It'll happen again. We just don't know when.
Okay. Stuart, I know Jamie mentioned the number of transactions, still is historically elevated, but what do you think contributed to the year-over-year decline in the transactions in 2023 versus 2022? Is there a widening gap between what buyers are expecting and what sellers' expectations are?
I can't tell you for certain, but I can tell you there's a couple of factors. One, 2022 was just so good for everybody. Profits were through the roof. Almost every dealership in the country had a buyer in line for it. I mean, everything. Didn't matter what the franchise, and I won't say any that are less desirable so I don't disparage anybody. But regardless of the franchise you had, you could sell it. As profitability started to wane, you did have a separation or growing divide between buyer and seller expectations insofar as, and we had plenty of these negotiations where if I'm the seller and in 2019 I made $1.5 million, and in 2022 I was making $1 million, or I was making $500,000 a month, my expectations are the good times are going to keep rolling. Whereas a buyer's expectations are, oh, I don't want to pay for a store that is making $6 million when eventually it's going to go back to $1.5 million. And you did start to see this gap between buyer expectations and seller expectations. But it was natural because if I'm a seller, I think the logic is if I can just hold on to this for one more month, I'll make an extra $500,000. And we actually had a few deals comically in 2023 where we get to the closing and, oh no, hold on. We got to wait another month. And some people try to really stretch it out. It's multiple months because in the seller's mind, they wanted to get all the juice out of that orange. But the buyers on the flip side say, well, for every month that goes by, that end of the good times, right? If we're playing musical chairs, that end of that music is getting closer and closer. And I think that some of that impacted. The beginning of 23 was still very strong for us, deal-wise, transaction-wise. Where we saw a dip in 23 was more toward the year end. I think once CJDR started to sputter in earnest, there was a question amongst a lot of dealers, well, the big question was it idiosyncratic or was this the canary in the coal mine? And you had a lot of deals, I don't want to say fall apart, either get punted or repriced toward the end of the year because buyers just weren't sure what to expect with respect to that brand, but other brands as well, right? Was this the beginning of the end? What happened was, CJDR dealers, Stellantis dealers would tell you it was more or less idiosyncratic. That wasn't, at least at the time, a canary in the coal mine. Anybody that had a Toyota deal was still more or less good to go.
Okay. What were sort of the top three trends that you saw in general driving the deals that did happen last year? What were buyers looking for in sellers? What were some of the main things that they wanted those stores to have that they wanted to purchase?
There's a saying that I've mentioned a bunch and a lot of folks have mentioned, right? That flight to quality. We heard about it during I can't imagine. I don't remember if it was COVID or the last financial crisis, 10 years ago, but there was this kind of surge of interest in United States issued treasuries because there was that flight to quality. There was definitely a flight to quality to some degree last year. However, I think one of the big factors was kind of a flight away from whatever the opposite of quality is without being too negative. We saw again during COVID, every dealership had a buyer. Dealerships that were in very rural markets had buyers. One was first-time buyers coming in. They could afford them. Two, you had long-time owners that maybe they make a couple $100,000 out of the store. Now they're making $1 million and somebody wants to buy it and they're willing to pay it on that higher earnings. I'm out. We've definitely seen a flight away from that. We are seeing a lot less of these smaller market stores. I wouldn't even call them tertiary market, just rural market. We are seeing just as many of them want to sell because, again, the music has stopped. Earnings are coming down. But we don't see nearly as many buyers, if any, looking to get into those stores. Secondly, and I'll borrow a term that Alan Haig used to use, at least pre-COVID. He'd always use the monopoly board game metaphor, that if you were really interested in growing your dealership group, if you landed on an open spot, it didn't really matter if it was Boardwalk or Ventnor Avenue, you bought it so you had the card, and so you could start to build out the monopoly board in your favor. We're starting to see a little bit of that, but I think it's still more toward the second half of the board, right? Nobody's getting that first stretch of stores on the monopoly. It's kind of the latter two sides where if somebody has an opportunity to buy a quality asset, they will buy it in the assumption or the plan that it will be a quality asset regardless, right? A Toyota store or a Honda store, a Kia store in a favorable market that has a lot of growth, particularly in Florida or the Southeast, kind of that Smile region. If you can buy a premier location Kia store, let's go ahead and buy it now. We're going to spend a lot of money on it, but in 5-10 years, the plan would be people will look back and think, man, Gail was really smart to buy that store. I remember when she spent X and I thought it was crazy. Who knows how much money she's made there since? And those are kind of the big trends that we're seeing.
We always see a lot of throughput at the Toyota and Honda and Lexus stores, but Toyota and Honda really seemed the most capacity constrained last year. So it seems like if you're buying in, you kind of expect a big upswing as they got their production back online. I mean, certainly if you did get in then, those could have been expensive deals that would end up paying off well.
There's definitely some logic behind that. I would say that it's the sword cuts both ways, right? If I'm in the market for a vehicle now because we're getting ready to have another child. We don't have enough seats in the cars we have. I'd love to buy a Toyota. I've always been a Toyota driver. I haven't seen the Toyota that I want on a lot just sitting there waiting for me to touch it, test drive it, whatnot in a long time. So I was at a Kia dealership over the weekend because I would like to have an import, reliability, cost-wise, kind of all the reasons why you buy an import. So now I'm at a Kia dealership for the first time ever, not as a consultant, but as a consumer. This is my first time as a consumer ever walking into a Kia dealership. And I'm there because I did not have a competing product readily available from Toyota and Honda. And so even today, most of my Toyota dealers don't have the inventory they want. They're starting to get more, but they don't have the vehicles they want. How does that translate in the future to units in operation for parts and service? And what does that do for customer loyalty? Like the forever Toyotas, does that sword cut both ways? I think so. When does it cut both ways? I don't know, honestly.
Fair.
what are sellers concerned about right now? What would you think their top concerns are as they're approaching the new year? What are the what's on their top concern list as they're trying to close deals? Aside from the cybersecurity issue, which is obviously, weighing heavily on them, and likewise, what are, what's on buyers' minds at this moment as they're trying to close, and maybe how does that differ, from last year?
Kind of piggybacking on that, actually, we have a question from the audience. Eduardo's asking what buyers' expected ROI is these days. Maybe that's a way to go at it. It's such a big investment. What are their expectations? What are their demands?
Well, there's two multiples paid in every transaction. There's the multiple that the seller thinks he got, and there's the multiple that the buyer thinks he paid. And, we see this repeated all the time by very high performing dealers. Again, names have been changed to protect the innocent, but we kind of all know those dealers where they can take a store that had record earnings. In the very next month, there's an extra 6 figures on the bottom line, like that. And in those cases, it's really hard to tell what the ROI is because, there's been a couple record deals that have been done in Florida, and I guarantee you, or I almost guarantee you, that the buyer made more the very next month. And so it's hard to peg that ROI because I can tell you what the seller thought they were selling it for. But if the buyer thinks they can come in and add that kind of money to the bottom line, it's hard. What I would tell you just from what I'm seeing, unleveraged returns, right? We're probably looking at 15-ish%, 20% in some cases. But again, a lot of that's idiosyncratic because every deal that we see where I think that one of my clients is buying something, we're going to make a good return, they're able to go out to a capital market, do a bond offering or something. So the interest expense I thought we were going to have wasn't the interest expense. The throughput that I thought we were going to have wasn't the throughput because the factory gave us a lot of stimulus units. What could be a 20% return on investment, cash on cash return might be 30%. It also makes it difficult going back to the monopoly approach that, are you looking for every deal, right? So we'll do Moneyball, right? Are you looking at it to just get on base or are you looking to hit home runs? Because they're very different strategies. If you're just looking to go get on base, then your ROI is not going to be the same. And it really is, I think you said his name was Eduardo, it really is up to what Eduardo's risk tolerance is and how badly he wants that point. If you are looking to base things solely on ROI, you will only close a fraction of the transactions you want to close. Gail, you'd asked kind of
have enough money to take one swing. You might want it to be a big one.
Correct. And that was, I think, Gail, you wrote the article this week about why Mazdas and Infinities are popular. Again, sword cutting both ways. If you really want to make one swing, is it the one that you want to make or have pose as an existential risk if it doesn't work out? And that I don't know, right? That's the question. Gail, you'd asked the what are sellers interested in today? The brokers that I've talked to, investment banks, depending on how they want to be defined, the guys that I'm talking to and gals I'm talking to, they've never been busier doing valuations. There are more sellers looking at the exit today from what I'm hearing and even seeing in my own clients. There's more people looking at the exit today than any time in the last few years. I think some of it is that they're worried that in the game of musical chairs, they know the song. The song's been playing a long time, and they're looking at the number of chairs that's left. And the considerations in mind are, will I get out before the bubble pops? Will I get or generate an exit multiple or just exit consideration that is anything like I would have gotten yesterday. And that's, I think, weighing a lot of sellers, because sellers are looking at it. They could have held on, and now they're getting to that point where they've held on maybe a little bit too long.
Maybe, but I think I've heard a lot of in the last few years, maybe people who were thinking about selling, the pandemic hit, and there was, of course, an initial panic, but then, there was huge demand and huge profits. Some of them just kind of hung around, had some really great years, had the best years of their career. And now it's like, okay, I can walk away now. had a good finish there.
A lot of it comes down to expectations. We just did a deal just recently, where, to your point, the dealer had been thinking about selling for a while, held on through COVID, did very well. And now, upon his exit, he's still trying to get every dime possible because his lifestyle changed, right? If you made $1 million a year consistently, you kind of had a house that was $600,000 or $700,000. You still flew commercial. You don't own a yacht. You might own a yacht, but chances are you don't. Your vacation house isn't in Aspen. Might have a timeshare, but it's not a house. And then all of a sudden, instead of making $1 million, you're making $4 or $5 million. And now you don't drive a demo. You drive a Ferrari, even though you don't have a Ferrari franchise. You have a house in Aspen or Vail or whatever. Everybody's lifestyle and expectations stepped up. No different than salespeople during this time, where they were making 50 grand. Now they're making 200 grand. Everybody's expectations stepped up. So it's not just, well, I've made my money, Jamie. It's, I made my money, I spent my money, and now I need to sell just to remain solvent, which is, and that's not every case, but I can probably name a half a dozen cases where that is definitely the fact pattern, that they are not selling so they can sail off into the sunset. They're selling so they can maintain the lifestyle that they've had the last few years just for a few more years.
Wow.
Mm-hmm. As far as manufacturers' first right of refusal, what have you seen in that both last year and kind of as we're getting into this year? Stuart, do you see that being exercised more and more? Is there a trend toward more of that?
I couldn't imagine being a dealer today, and this is where I'll start to get nasty texts from brokers. I couldn't imagine being a dealer today and spending considerable effort to buy a Mercedes franchise, given that the likelihood that I'm a winner on their list is just not that great, right? We've seen now multiple times, and I'm not speaking out of school, right, because we've seen it in automotive news. We've seen multiple times where dealers that would have seemed like premier on the nice list at the factory go down the rabbit hole of getting approval only for the franchise to exercise their right of first refusal. And then you realize you're not the chosen one. Somebody else is. And now I have spent, I don't know, low six figures on legal fees. I have maybe passed on other transactions because I'm like, oh, I'm getting a Mercedes store. I don't want that Honda. I can't do both. I've wanted this store. We've definitely seen ROFers exercised more in the selection of winners, at least in my expectation or my purview, than ever. But it also can be used as a tool. So we've looked at a couple of transactions where we're buying a group. We're not necessarily interested in the group. And so we can now craft, or all dealerships within that group, or all franchises within that group. So we're now crafting some of our agreements in a way that the franchise we don't want will be picked up. And that helps us get across the finish line. Now we don't need that capital outlay for, store XYZ in this town, because we've crafted it. We kind of have an idea that the factory's going to buy it. And in some cases, the factory tips their hand and says, hey, we know you're buying this group. It can either be a ROFR or we can buy it from you. Whichever way you want to structure this deal, we just want you to know if you do close on it the way that you are, day one, you'll get a phone call from us. to buy it out. So in some ways, that's, it can be a benefit to maybe not higher end dealers, but some of the middle level dealers that don't have what seems like unlimited capital. Those dealers can be very strategic and maybe force a ROFR that makes a platform more attractive, more affordable by carving something out. But just to go back and reiterate, there are some franchises that it's hard to tell our clients to spend the time. We had a dealer. They were looking at a particular franchise, and I think they had 2 or 3 ROFRs executed on them in quick succession. And this was a dealer that was in favor with the franchise in particular. Mm-hmm. It just either the franchise or the OEM didn't want anymore. They didn't communicate that to us, of course. Or maybe they thought this dealer just had too great of a concentration within the brand. We don't really know, but it was back to back to back deals that we thought were going to close, and they all just tumbled like dominoes.
So we're almost out of time. Before we let you go, I want to make sure to let the audience know about a few things going on at Automotive News. We have a new awards program just announced today. It's a collaboration with our amazing colleagues at AdAge. It's called the Global Automotive Marketing Awards, the GAMAs. The GAMAs will recognize groundbreaking campaigns that drive business growth and make substantial and measurable impact for automakers, mobility providers, and yes, auto dealers too. You can see all the details at autonews.com/auto awards. The deadline is 5 p.m. on September 23rd. Of course, you have to get that in by the 23rd because that's when you need to go to Automotive News Congress, September 23rd and 24th. Speakers include GM North America President Marisa West, VW of America CEO Pablo DeC, NADA President Mike Stanton, Ford Model E COO Maran Jaya. It's a great speaker lineup. It's going to be at the M1 in Pontiac. We also have some other cool stuff lined up, but I can't tell you about it yet. I think it's going to be really great. Ford Motor Company is our host sponsor. If you sign up now, you can get the early bird pricing. There's a link to that on my LinkedIn page. And I think we'll also get that posted in the chat. Lastly, please also let us know your nominations for the 2025 list of the 100 leading women in the North American auto industry. We've been doing this list every 5 years since 2000. It's a really big deal. Go to autonews.com/leadingwomen2025 to nominate someone or apply. The nomination site closes August 12th. Okay, that's enough about what I'm going to be doing with the rest of my year. Gail, do you have one final question for Stuart?
Let's have Stuart look into your crystal ball and let us know what do you project for the buy-sell market for the rest of 2024. Do you think we're going to be up or down in transactions? What types of things do you think we're going to see, whether they're surprising or not this year versus last year?
I've heard some buyers say that they're going to wait and see. A phrase that we use a lot now here at Withum is survive to 25, right? With the election uncertainty, interest rate uncertainty, geopolitical uncertainty. There's a lot of dealers that if they can't afford to wait, they are, right? I've had some prolific buyers that you've written stories about that said, maybe I got 1 or 2 left in me and then I'm going to go to sleep like Rip Van Winkle. But I think what we have seen is that when one buyer leaves, another one enters. And so we don't know who the next big consolidators are. Maybe we do. They're just starting out. But my guess is that the buyers in the headlines shift somewhat in the latter half of this year as the consolidators of the past year, couple of years get indigestion. Others will come in. We're looking forward to see who that is.
All right. Well, we know there's going to be a lot of activity. We'll be keeping in touch with you for sure, Stuart. That will do it for today. Thanks to our production team, Rudy Shork, Tiara Riddick, Dean Storm, Marissa Marcinkowski, and Jake Neer. Special thank you to our guest, Stuart McCallum from Withum. We really appreciate your time and insights. That was great. For Gail, Howe, and everyone here at Automotive News, I'm Jamie Butters. Thanks for watching. We'll see you next time.